Imagine you wake up tomorrow and every number in your bank app is still there. Your salary, your savings, your balance looks normal. But quietly, behind the screen, the rules that decide what that money can do have changed. No announcement, no emergency alert, just a shift of control. That uncomfortable truth is this: money feels personal, but control over money is not. And today, we're going to explain who really controls the world's money, explained simply, without jargon, without drama, and why it matters right now. Not in theory, in real life. Because when people ask who controls the world's money, they usually imagine a single villain, a secret room, a red button. Reality is stranger and more powerful. Let's start small, like explaining it to a 5-year-old. Imagine a giant playground. On this playground, kids trade things: toys, stickers, candy. Very quickly, trading gets messy, so the kids agree to use tokens. Everyone trusts the tokens because everyone believes the playground rules will stay the same. Those rules matter more than the tokens themselves. Now scale this playground up. 8 billion people, every country, every job, every dream. That's the global money system. And the first uncomfortable truth is this: money itself doesn't have power. Trust does. Whoever controls trust controls money. At the very beginning, money was simple: gold, silver, physical things. If you had it, you owned it. Kings controlled money because they controlled the metal. If they lost wars, they lost money. Control was visible, brutal, limited. Then something clever happened: banks. Instead of carrying gold, people deposited it. Banks issued paper claims instead. Lighter, faster, easier. At first, banks promised you can always get your gold back. Then they realized something dangerous. Not everyone comes at once. So banks started lending more claims than gold they had. This wasn't evil, it was efficient. But it quietly changed who controlled money. Now, control didn't belong to whoever owned gold, it belonged to whoever created claims. Fast forward to the 1900s. World wars destroyed trust. Currencies collapsed. Inflation erased savings. So governments stepped in. They said, "We will control money. We will manage it responsibly." Central banks were born. Institutions that don't print money for profit, but to stabilize systems, in theory. The most important one emerged after World War II, the U.S. Federal Reserve. Why the U.S.? Because America won the war, held most of the gold, and rebuilt the world. The dollar became the center of gravity. In 1944, countries agreed their currencies would be tied to the dollar, and the dollar would be tied to gold. It sounded fair, stable, permanent, until it wasn't. In 1971, the U.S. quietly broke the link to gold. No more anchor. From that moment on, money became something new. Not metal, not paper, confidence. The dollar didn't collapse, it strengthened. Why? Because the world had no better alternative. Oil was priced in dollars, trade settled in dollars, debt written in dollars. The system locked itself in. Here's the key idea, explained simply. The world doesn't run on money, it runs on promises. And the strongest promise wins. Today, when people ask who controls the world's money, the real answer is layered. First layer, central banks. They control interest rates, liquidity, the cost of borrowing. When interest rates go up, money becomes scarce. When interest rates go down, money floods the system. This affects everything: jobs, housing, stocks, even politics.
But central banks don't act randomly. They react to inflation, growth, and fear. Which brings us to the second layer, governments. Governments decide how much to spend, how much to borrow, how much to tax. When spending exceeds income, debt grows. Debt is not a problem by itself until trust breaks. Here's the uncomfortable math. Most money today is created as debt, not printed, loaned into existence. When a bank gives a loan, new money appears. When the loan is repaid, money disappears. This means the system needs continuous growth, or it tightens painfully. And now comes the quiet irony. The people who control money are also trapped by it. If they tighten too much, economies crash. If they loosen too much, inflation eats savings. There's no clean exit, only trade-offs. Now let's address the myth. Is there a small group secretly controlling everything? No, but there is a concentration of power. Financial markets decide which governments survive stress, which currencies remain strong, which countries pay higher interest forever. If investors lose confidence, money leaves, currencies fall, living standards drop. This isn't conspiracy, it's math reacting to fear. And the strongest magnet for confidence remains the same, the US dollar. About 60% of global reserves are held in dollars. Most global trade clears in dollars. Even rivals depend on it. That gives the US an unusual power. Not total control, but leverage. Sanctions work because money flows through systems the US influences. But even that power is fragile. If trust breaks, the system shakes. That's why crises matter so much. 2008 wasn't just the financial crash, it was a trust collapse. Central banks responded by creating trillions, not because they wanted to, because the alternative was worse. The system survived, but changed. Now money feels abstract, numbers on screens, debts rolled forever. And that brings us to today. Inflation, rising rates, currency stress, new digital money experiments. People sense something is off. They ask, who's in charge? The honest answer is unsettling. No single person, no single country, no single institution. Control is distributed across incentives. Central banks manage stability, governments manage politics, markets manage discipline, and ordinary people absorb the consequences. Savings shrink, assets inflate, inequality grows quietly. The biggest risk isn't collapse, it's normalization. A world where money feels permanent, but trust slowly erodes. Where control exists, but responsibility is blurred. So who controls the world's money? The ones who can maintain trust a little longer than everyone else. And here's the final uncomfortable question. If money is just shared belief, what happens the day people stop believing in the same story? Because when trust changes, control moves with it.